welcome back to another episode of the Isn't That Rich podcast. Today we are talking all about commercial lending with one of our favorite bank presidents, Mr. Mike Hopkins.
Hey there.
Hey there, Mike. How's it going?
It's good. It's good.
Hey, I can't wait for this episode because you two both have great laughs. So we're just going to laugh the whole time and talk about business financing.
Try not to laugh too much.
Yes, because business lending is a pretty funny thing.
It's super hilarious.
Oh, yeah.
Here we go.
Here we go.
Well, let's jump on in, Mike. We adore you here at the bank, but to our listeners who don't know you, how did you get into the banking industry? Tell us a little bit about yourself.
Okay, so went to West Frankfort High School.
Oh, no.
Yeah.
Sorry.
I was a Redbird
So was my mom.
in 1979, so don't do math yet. So in 81, I graduated from Johnny Logan. Why would you go anywhere else? To get a business degree, associate's degree in business. And then I went in 1983, I graduated at SIU Carbondale with a business degree in marketing.
Oh, that's right.
yeah.
He's secretly on our marketing team.
Yeah, there we go. So, like October before I graduated, I get a phone call from someone who played football with my brother Leonard in high school. He worked for the Bank of West Frankfort at the time. Said, would you be interested in talking to us about a job? We had somebody retire. I said, well, when do I start? And he said, well, as soon as possible. And I said, well, I'm not out of college yet. Oh, never mind. 2 months later, he calls back and said, come see us. So I had a lunch and they offered me a job. I had no idea what I was going to do. I had no idea.
Wow.
They trained me as a teller for like a week and a half, and then we had to go pick up a car. So I became the guy who picked up cars. So I was a repo man for a little while, and I did
collections.
I was a collection guy, and then I started with installment lending, and then small real estate lending, and then small commercial loans, and so if you did the math, I've been in banking for 41 years this June 1st.
Wow.
Oh my gosh.
And
Congratulations.
Thank you. And in commercial lending for the last 27 years, pretty much.
Wow.
Yeah.
I think it's funny because like the nicest two people I know are both did collections. So Tom Jones and Mike Hopkins.
Yeah.
Hi, I'm here to take your vehicle. You didn't pay, but
If you could get them laughing, it was really good.
They just they're like, oh, you're just so nice. Here's the keys.
I'm not going to hit you. Yeah.
I'm not gonna hit you. Dang it.
oh my gosh.
That was a win.
So
Yeah,
funny.
that was a win.
All right. So today we're talking a lot about, all about commercial lending and financing for businesses, which is what you do a lot of. So
I do.
I'm excited to talk about it. So for someone just starting a business, finances can be a little daunting.
Mm-hmm.
What advice would you give to a new business owner that is seeking financing?
Okay. So a brand new business right out of the gate, someone has an idea. It is great to go into the Illinois Small Business Development Center. They're at SIU. Mm-hmm. They're sponsored by the SBA, so they get paid. This is a no cost to that person. I guess this part of the podcast is brought to you by the Illinois Small Business Development Center.
Which is great that we
Great
have that.
program.
It's
I've
great.
used it before.
Oh, you have?
Yeah, I've done
it
it.
is.
And
It's great.
It's amazing. You're like, this is free?
Yeah, they
it's
give
awesome.
you. They'll let you. They help you do a business plan. They do financial analysis. They do everything. You get to work with them, and then you come into the lender and say, "This is the idea I have." Now it's written. I mean, think about this: if you had two cousins, they both wanted to borrow $500, and one cousin says, "I got this idea. I'm not sure if it's going to work. You give me $500, and I'm going to try to pay you back." Or B, you got a cousin that says, "Look, I'm going to buy these widgets. I'm going to sell them for $2 a piece. I'm going to make $1,000. I'll give you your $500 back." Wouldn't you be more apt to look at that person to give them the $500?
That's a good way to put it.
Yeah. So the less risk you can show the banker, the easier it is to get that business loan.
Yeah.
So you really are kind of putting together a business plan.
Yes, absolutely. Yeah. And so they will tell you, they'll give you an idea what your income could be. Mm-hmm. And of course, as a banker, we have to take a look at that, see the reality of it. We also look at the person themselves, and if they have anything, if they have a net worth if they have other income. A lot of people do a second business, or they start up a business, but they also have other income, which helps, secondary form of income. So then we look at, okay, this is what the business could make to pay back the loan. And if it has bad times, this is what they make. Yeah. So, and then we look at what their debt load is and what the new debt would be to them. So that's kind of how we look at it. It's the less risk, the easier it is to get the loan.
Okay.
Make sense?
Makes sense.
Okay.
That's easy. I like
So
the cousin
if you're going to present
scenario.
something risky, you should have a good proposal planned.
A good proposal helps. Yeah. and a banker that's going to, sit and.
But I think it's good to
Talk
know
to you
that
about
there's,
it,
resources out there that are free to help people with that. So,
And it's not only for brand new businesses too. They will actually help you if you're a business that's having a little bit of trouble. You can go in and talk to them. I mean, they have seminars. They have, again, a lot of free things that you can take advantage of. So again, Illinois Small Business Development Center at SIU Carbondale. It's a great place to go. Yeah.
I think, excuse me, I think a lot of people, we hear this from some of our business customers, we'll say like a dentist. They're like, I went to school to be a dentist. I didn't go to school to learn how to run a business. And so.
Perfect example. You've got dentists or doctors, lawyers, a lot of people who are very smart people, but the business side of it is.
Yeah, and they don't understand the finances of some things. So
I do always tell people that you really need, obviously, you need a good banker. And you need a good accountant, and you need a good lawyer, really, if you're going to have a business. And when I say good, you got to have someone who you trust, someone that you can deal with, someone you can talk to one-on-one and feel very comfortable with. Because there's a lot of bankers out there, there's a lot of lawyers, a lot of accountants, but you got to pick the one that makes you feel the most comfortable. So, yeah.
Okay.
So, obviously commercial lending is like it's kind of broad. So, but what can people expect with farmers? Like what type of commercial lending do we offer?
Right. All right. So we do a lot of rental properties where people are buying houses and then they rent them out. We do a lot of commercial buildings where people will buy a commercial building and rent or lease out to other businesses. I've had businesses that own their own building. Maybe they want to add on or they need new equipment. We do equipment loans. I've had businesses that are really heavy into construction, where they need these really big caterpillars and things like that. We will finance those. Food trucks. I've done. We do a lot of hotels because we have an SBA department, who is actually our SBA department is a preferred lender, so they can get things done a lot faster, a lot easier. So it's great to go see if you're going to look at an SBA loan, Farmers State Bank is a great place to go.
Will you explain that? What's the difference between an SBA loan and just a traditional commercial loan?
Okay,
Am I saying that right?
Yep, you're absolutely saying that right.
Because people don't know.
Right. So commercial loan is where you just go to the bank. We give you, if it's a real estate loan, we'll do a 20-year term. The rates will change variably. We can get to that later. But with an SBA loan, it gives the bank some form of guarantee.
Okay.
So especially like there are some loans that are, they are good, but they have maybe environment or maybe there's something going on to where there's a little bit of less, you need a little more strength into the loan, or maybe they're startup, they're just buying something where it's a very big loan and they'll get the SBA guarantee. And so SBA will guarantee, say, 70% of the loan. So it gives the bank a little bit easier feeling. There's a couple of different SBA programs out there. There's the 7A, which is what we mainly do. There's also a 504 program where the borrower will put in, say, either 10 or 20% down, and SBA will, the bank will put 50% down, and then SBA will come in with the 40 or the 30% down. So, so then the bank would have a first mortgage, but they have 50 cents on the dollar. So,
wow, this is a lot. I'm like, wow.
I know, I'm throwing it all out there. Sorry about that.
I'm like, I don't know if I want to start a business. But it sounds like there's a lot of options for people if they are wanting to finance a business.
Yeah. And to come to Farmer State Bank, it's nice because you have bankers and lenders who do just the mainstream traditional loans, and you have a SBA department who can tell you everything that they can do for you. So it's kind of a great product for us to have.
Great.
Love it. What would you say are some like essential factors you look for in a loan application?
Okay, so this is really simple stuff because I'm a simple guy, you know.
Me too.
There you go. So the first thing you learn in lending 101 is there's 5 C's of credit, and so they are character, capacity, capital, collateral, and conditions. Yeah, if you saw me look down, I don't memorize things. I have to see them. So character, of course, that's how well you know the person. If you know them, that you know that they've good character. But if you really don't know them, you look at their history, you look at their credit check, you look at what have they done. Have they done everything they're supposed to do? Do they have any lawsuits out there? Are there their things? So you look at their character. Character is the strongest thing to me about making a commercial loan or any loan, because when things are down, when life is going bad, your character keeps you going. And that character keeps the loan being paid. And the character comes in and talks to the banker, and we help work things out. So character is huge. And then capacity, that's just what income you have coming in and what debt you have. And do you have the capacity to get the new loan? And we look at that part. The capital is, do you have any net worth? Do you have assets? Do you have liquid assets? Do you have something that in case things are going really bad, you can still lean back on, okay, I've got this in the account. I have a rainy day fund. I have something that will help me get through this little crisis.
Carry you on.
Carry you on. Yeah, very good.
That's maybe one of the C's.
That's a new C. Carry you on. That's right. That's the 6th C.
That's the 6th C. Carry on.
6th C.
And then collateral, that's hard to say, by the way, 6th C without going through the microphone here. Collateral is what it is. You buy a building, you do 20% down, we'll lend you 80%. And people say, well, why can't I just do 100% down? Well, we're partnering with you we're not buying everything for you.
It's risk, yeah.
We're the partners. So we'll partner with you, and we'll do 80% of it, and you do 20% of it. And then you come in every month and make your payments. And that's a good partnership. So you got to have collateral. I mean, there are unsecured loans out there, but usually, again, what we say, higher risk, higher rate. So if you do an unsecured loan, I know there are these online places that people have gone to. They say, hey, you can get this business loan for X amount. All you have to do is sign your name.
You really should be on radio.
Thank you. I have the face for it.
It's really good.
He's done like 2 commercials already on here today.
I'm in marketing. What can I say? So they just say, here, fill this out and sign your name. We'll give you the money. And they go, great. And the commercial makes it sound so nice. But I've talked to these people. There's 17% interest rates out there, 18%.
My gosh, on a business loan?
On a business loan. So, yeah.
That's crazy.
If you think that's that affects your monthly payment so much. So it's crazy. Yeah. So when you see it on the commercials, they're nice, they're easy, but they're not nice to pay back. So you got to, again, so that's why we usually take collateral, less risk, lower interest rate. And then conditions. And conditions that's kind of a call. What's the environment doing? What's going on in the world? I always say that, a guy wants to start a new business. There was once a guy that probably had the best buggy whip operation ever. He sold the best buggy whips for these horses, and then the cars came in, and what happened to the business? So you got to look at the conditions. Yeah. Are we really, looking at, is this something that's viable? Is this something that would work in the world? And that's kind of a general call, and every bank has to get their arms around it to be able to see, okay, we see where you're going with this. We think this is a viable business, and we want to partner with you on this.
Yeah, because if you can't make money doing the business, they're not going to be able to pay you back.
Well, that's just
then you're out the money, Mike.
And that's right. And there are bankers that will say yes to things.
Yeah.
and it doesn't help. And I actually did have somebody one time came in. I was a young banker, and they came in and they were having troubles with their business, and they looked straight at me and said, "Well, this is your fault. You gave me the money." Oh. And it reminded me, you know what? It is partly my fault, and it's my fiduciary responsibility to not only protect my bank, but also protect my customer, to make sure that what I am letting you have, the money that I'm giving you, is I feel like you can pay back. So yeah, there is some, again, we're partners. So I want to make sure that I do right for my customer.
Yeah, so sometimes no is the right answer.
Sometimes no's, but I will say, don't let one banker tell you no, and then you walk away saying, well, that must not be a very good business, because there's a lot of bankers out there, and a lot of people see some things differently. Or a good banker can tell you, all right, I'm going to have to tell you no, but this is why, A, B, C. So then you work at A, B, and C, and then maybe you come back and say, hey, look, now I've got this, I've got this, I've got this. Now what do you think? So that's happened before. We've had people come back 6 months, a year later. Now all of a sudden they're stronger. They have a little bit more money in the bank. It just makes it a little easier.
Yeah.
That's good. So at what point do you think you could tell a small business owner, at what point would someone maybe need to get financing?
Right. Oh.
Is it because they're wanting to expand? Like, what are some of the reasons you're seeing that small businesses or businesses in general are wanting to get a loan?
Well, yeah. Usually the business comes in and they realize, and that may be through their accountant. They come in, they say, hey, we have maxed out our abilities. We can only make this. We can only make so many widgets now. And we feel like we could sell more if we could make more. So what our thoughts is, we're going to expand our business. We need more equipment. We need this. We need that. And yeah, I know we're going to have to pay that money back. But if our sales go up, profits go up, and we look at the future and see that that's where we want to be, because a lot of businesses will tell you if you're not moving forward, you're going backwards. So there are a lot of businesses that come in. We as a bank don't actually go out and tell you that, because that's really not our business.
Right.
Our business is to take in what you say, see if it makes sense to us, and then again, I'll use the word partner again, but yeah, that's what we do. We'll partner with you and concur that you are going to increase sales and where we see this. But so yeah, that's how we look at that.
That's great.
So is that how you think that can help businesses like improve their cash flow, or how
Perhaps,
do you think commercial loan can help with that?
So with cash flow, it could be a couple of different things. It can be you increase your sales, you increase your profits. But there's also those that you can look at and see they spent and they just spent a whole bunch of money on some expense. Now, a lot of times it's just a one-time expense. You'll say, hey, this went up really high. Why was that? Well, I needed to buy something, and that's a one-time thing. It's going to last for 20 years. Okay, great. So then their cash flows are automatically going to go better the next year. So it's more we take a look at it. Sometimes it's us and the accountant and them sitting together. I've sat with accountants before and with the business owner, and because I am not an accountant, I had some classes, but I knew
marketing. Don't forget about it.
I knew early on that I was not going to be the accountant.
Me too.
So yeah. So yeah, sometimes it's just taking a look and seeing how you can help them. But that's kind of cash flow is a tough thing to see. Now, what we like to see is that the sales go up, expenses stay about the same percentage wise, and that their income will go up with that. So, that's a nice little thing to see as it goes up and up. When you see it start going down, then you kind of wonder, and you have to take a look at.
You're making some phone calls.
Well, you kind of wonder, and you ask questions, because sometimes there's great answers to that too. It's in 2020 when COVID was around, we saw a lot of those sales go down and things like that, but they bounced right back up in 2021. So again, environment plays a big role in business. commercial lending.
I want to talk about collateral. I think this is like an interesting part of a loan. So collateral often serves as security for a commercial loan.
Right.
So what are some common types of collateral accepted by lenders, and how does the value of the collateral impact the loan term?
Wow, good question. Because it does. So on a commercial building, normally on a traditional loan, we will go up to 20 years repayment. Some will go 25, depending on the type of building. The SBA on the other side, they can go up longer sometimes. They flexible on things like that. So you have a long-term asset with a long-term loan. An equipment loan that may last 10 years, we usually like to go 7 to 10 years on that type of loan, that term, because you wouldn't want to stretch that out to 20 years, because then the guy in 10 years, he says, well, I have this equipment that's no good.
Right.
I still
But I
owe
have
you
a
10
loan,
years.
10 years of loan payment. Okay.
It's kind of like if you were going to get a vacation loan, and I want to go get a vacation loan, and I want 3 years to pay it back. Well, what are you going to do the next 2 years? You're not going on vacation.
Yeah.
So we play the collateral by the lifespan of it. I think that's probably the best way to put it. Car loans, that's why car loans are 5 to 7 years now. Truck loans, pretty much the same.
So, like the car is the actual collateral.
That is the collateral.
The building is the collateral.
That is, yeah. So you will put 20% down, and we will hold a mortgage on that building or on that house.
Okay.
There are things that are titled, like trucks and cars, things like that. We will hold the title to that with our lien on that. There are other things out there, intangible things or things that aren't titled. We'll say like a Caterpillar tractor or a John Deere tractor. I'm not doing a commercial about either of those. So
People get fired up over that. My dad.
Right. People like colors.
Red or green.
Yeah,
Red or green.
Red or green. That's right. So I'm not going to distinguish on colors right now. I'm going to say if somebody was going to buy a tractor for their farm, again, that tractor in their mind, 7 to 10 years. So they put 20 to 25% down. Sometimes we like to have a little bit more down on things that have an easier way of breaking, or depreciate a little quicker.
Yeah.
Again, depreciation, that's the big thing on the collateral. So we do the loan for 7 years, or we do the loan for 5 years. And that way, at the end of the 5 years, they still have a little bit of equity left in that tractor. I mean, they may want to keep it. They may want to trade it in for the next tractor. So that tractor would be our collateral. There's no title to that tractor. So there is a thing called a UCC, which is just we file it with the state of Illinois that says we are holding a lien on this tractor with this serial number and things like that. So that's the collateral.
Until they pay it back.
Until
right?
they pay it back.
And if they don't pay it back,
then you got to see a guy like
does Farmers
Junior
State Bank own the Caterpillar now?
Well,
is that kind of how that works?
See, that's the other thing. There's not a bank in the world that wants to own a Caterpillar, and I don't know how to drive one. So
What if it was a John Deere?
John Deere? No, still yet. Red or green? Not going that way. Or orange, whatever color they want to be. No, we work with. Obviously, we work with the community banks. That's what they do. They work with them. But yes, in the old days, back when I didn't lend. If somebody didn't pay for that car, I had to go in and drive the car away and sell it. And but that's bad stuff.
So you take it and then we sell it as a bank, and that's how we kind of recoup our money.
Yes.
And that's collateral, folks.
That is collateral. But no one makes collateral-based loans, and I'll tell you why. Because it doesn't matter, even if we have 20% down, at the end of the day, if we get the collateral back, we're not going to be able to sell it for what's probably left on it. So that's why I say, especially with community banks, you work with that banker. There's where the character comes in at.
Back to the 5 C's.
Back to the 5, not the 6 C's, but the 5
Just the
C's.
5.
That's right. So that's where the character comes in at. You've got to be able to go in and say, hey, I'm having a little trouble. And okay, let's work that out. What can we do? Talk to them. communication. Ooh, that could be the 7th C.
Oh my gosh, we're going to make it to 10 by the end of this episode.
Communication is the key to that. You got to make sure that, and again, that's why I say, get a lender that you're comfortable with. Get someone that you can talk to. They can't always tell you exactly what to do because that's not the lender's job, but they can tell you what they can do as the banker.
Yeah.
Go from there.
Yeah, that's with the last podcast with Tom Jones. He was talking about, don't hide from collections or anything. That's actually like the worst thing you can do. So like if you're struggling, don't hide in shame. Like we actually want to help you.
Absolutely.
We're here for you.
That's right.
So like, talk to your lender and see what can be done.
That's always the best case. Yeah. Yeah.
So what are some shifts that you've noticed within the market recently, and how do you feel like that's kind of affected, businesses looking for a loan?
Biggest shift in the last 2 years have been the interest rates. Interest rates have gone up quite a bit, so the economy has slowed down. If you've noticed, inflation has gone up.
Noticed
I don't know if anybody noticed that. Yeah, a little bit.
Just a little bit.
So hungry.
$10 for a jar of mayonnaise, maybe. I don't know.
And again, as I'm not an accountant, I'm also not an econ major, so I can tell you what I know.
We're just
about
marketing,
that.
folks. We're just
marketing.
social media girlies.
That's right. I am just a banker. But yeah, right now that is, if someone sees the ability to build maybe a 4-bedroom or 4 unit apartment building, and then they see what the rates are right now, then they have to kick back and start looking at the addition and do the math. Does the math make sense? Because they have risk out there too. They're builders. They want to make money.
Yeah.
And so if the interest rates are too high, they're really not making enough money for the risk. So that's certainly one of the things. Did that answer your question? Yeah. Okay.
So I may be getting into the weeds with this question.
Right.
But we're talking about the economy, inflation, and interest rates. How are, I kind of comparing this to like mortgages, and because I know that world because I've been going through that myself.
Right. Yeah.
And so when someone goes to get a commercial loan, how do you determine the interest rate? And I'll just stop at that question. How do you determine the interest rate for someone?
Okay.
Because I'm kind of under the impression that it's prime rate is just the rate that everybody gets for commercial, but I don't think that's correct.
No.
Okay, so I'm wrong.
Well, no, you're close. You're close. Here, okay, again, not an econ major, so anybody listening to this, if I'm wrong, I understand. But the Federal Reserve, the Fed, they oversee all the banks, and they lend. They are the banker's bank, so they lend to banks.
That's
right?
the best way anyone's ever described it. Is they're the banker's bank.
There we go.
John Streeter never said that.
Well, all right. Now wait a minute. I got to go back and work now. Wait a minute.
It's got to go back to West.
Yeah. So they lend to the bank. So they also decide what the discount rate is. Discount rate is the rate that they will lend money to the banks. All right. So the discount rate today is 5.5%. I think it changed August. I think that's the last time it changed, August of 2023. And it went up to 5.5%. Oddly enough, the next day, the prime rate goes up 3% higher. So the prime rate's almost always 3% higher than the discount rate, okay? So prime rate, by definition, is the best rate that a bank will give to their best customer. So back in the day, I would tell people, General Motors, they get prime rate. If you're not General Motors, don't expect prime rate. Now it is, the rates have gone crazy over the years, and I think I wouldn't actually go to a bank looking for the lowest rate anymore. I think I would go to the bank looking for someone who can, because sometimes the lowest rate will end up costing you the most. So you go to the bank that the banker is going to be on your side and there for you and a true partner for you. And that's really what you want to do. I mean, yeah, the interest rate is the number that you plug into to see if things make sense. But the bottom line is you do not want to walk in just to get the lowest rate. You don't want to get the lowest insurance. We don't want to get the cheapest anything, do we? We want to get something that make sense to us.
That's going to carry us on.
Exactly. So
Back to those C's.
there you go. Another carry
You
on.
on the 8th C now?
So yeah, boomerang and backarang.
So that's kind of
go.
how you determine the interest
Yeah,
rate. So we
so-
got to look at the discount rate.
Right.
We got to look at the prime. We got to look at these C's.
Right, exactly. So and then the Federal Reserve.
I'm coming for your job, Mike. I'm sorry.
Right. It's simple. Give me a couple, 3 or 4 more years, all right? So it's simple. Federal Reserve sees that the economy is going a little bit too fast, a little too hot. They try to slow it down. So what do? They raise the interest
Bump
rate.
it up.
They bump it up. That will slow down a bank needing cash to lend to all these businesses because now their discount rate is higher. So now their business loans are going to be higher. So that slows down the business. So that is their way. And again, not an econ major, but that is their way of trying to calm down the inflation, calm down the economy. So as inflation goes higher, they want to curb that. If the inflation is really, really low and they want to stimulate business, then they lower the rates. So,
Interesting.
My next question, a part of kind of this interest rate question, I learned this from Jill because she just had her big loan come up for renewal. And I find this concept interesting, and you're just going to have to explain it to all of us. But like when you go get a mortgage and it's a fixed rate,
right.
I don't really ever have to talk to the bank again. I just have to pay my bill. Nothing changes. Tell us about business loans and a balloon. Have you heard of the balloon?
Yeah, there are balloon loans.
I don't know.
All right. So, again, what I just talked about with the Federal Reserve, the Fed, that's a short-term rate, really. That's their rate that discount rate could change daily. Now, it doesn't, but it could. It's a short-term rate. They also do things with the treasuries that will help the long-term rates. I don't do long-term rates. That's with your house loans, things like that. John Streeter, we'll bring him back in. We can talk.
Good job, John. We
Yes,
love you, John.
Best residential lender.
Yep.
Him and Polly, absolutely. So we have short-term rates, and because one of our risks in lending is the interest rate risk. You know, we could lend. Way back in the day, there used to be savings and loans, and they would do all these in-house rates that were really, really low. And then in the 79, 80, 81, when prime rate went up to all the way up to 20.5%, they were actually having to pay out more on deposits than they were making on their loans. So we have to temper that. So right now we're looking at changing. We do variable rates mostly, and our variable rate changes every 3 years on our business. I think that's good because right now the rates are high. So maybe in 3 years, automatically they get a lower rate. They don't have to refinance. They don't have to do a lot of things. On a balloon loan, and there are banks that do balloon loans. I've done balloon loans. That's a way for the banker to go face-to-face with their customer every 3 years and say, okay, this is what we can do. Adjustable rates, sometimes, it just adjusts. And if that customer gets mad at the new rate, we may not know as bankers that they're going to walk out our door. Now, the community banker knows better, and we talk to the customer once a year at least, and we talk to them and see how they're doing, so we know not to do that. But so there were some people on the fence, they liked the balloon loan, and that just basically means it matured. Flat matured, then you had to renew it every 3 years. But an adjustable just keeps going on for the full 20 years or whatever, and it adjusts as it goes. There was a bad thing about a balloon loan back when the last recession. A lot of these bigger banks, they had these balloon loans, and so they matured, and even though the guy was paying really well, they needed the cash. And so they'd say, hey, you're going to have to take this loan somewhere else.
Oh, so that's like the problem. They're not going to renew it.
They don't have to renew it at a balloon.
And you're hoping that you can take this loan elsewhere.
Absolutely, yeah.
Okay. And so with a variable loan, am I saying that correct?
Yes.
I can keep that with Mike Hopkins for my 20 years?
Absolutely, yeah. It just the rate varies.
Okay. So it switches it up.
Switches
All right.
up, yeah.
So a balloon loan is going to mature. It's going to pop. That's the way I think. Every 3 years.
Or every 5 years.
And
or
you
whatever.
guys got to make a decision and the bank may kick you out. But a variable loan, you're staying with your banker.
You're staying with your banker.
Okay, got it.
Love
Yeah.
it.
Okay.
all good information. So, Mike,
you.
let's say someone is, interested in getting a commercial loan. What advice would you give our listeners today?
Okay. Yeah, obviously I already talked about brand new businesses, but the normal business, the people that we go out and prospect, the people that are our business customers now, they have a new loan, they have a new request. We like to see the last 3 years of their business tax returns. We like to see the last 3 years of their personal tax returns, and we want a personal financial statement. And you say, well, wait a minute, now this is a business. Why are we doing personal stuff? Well, 99.9% of the loans that we do, the business is that person. It's he or it's she that owns that limited liability company, or if they have this corporation or whatever, but they are the owner. If something were to happen to them, that's the business right there. So we not only take into consideration what the business is doing, but we also take into consideration what that person is and who they are and what they have, because we're going to have them sign a guarantee for the loan. So it's not just the business, it's the business, the person, the bank. We come together and do that. So if it's a brand new business, again, a great, well-developed business plan. We'll go back to that from Carbondale. But if they've got or if it's a company that's been in business a while and they want to switch gears a little bit, it's great to have a business plan. It's great to have, they can write down on paper what their thoughts are, what they want to do to change their business up a little bit. So we need that. We need last 3 years tax returns of both business and personal. And what we do there is we have someone who analyzes all the trends, and they look at how the income is, how the sales have been, how the debt service coverage is, and if your new debt will affect that debt service coverage and how will it affect it. But we also look at if you're going to, I am going to double my sales. So we have to take into consideration, if they double their sales, then their new income should be around here, so their new debt service coverage is around there. So there's a lot of analyzing of numbers on that.
A lot goes into it.
Yeah.
I don't think people realize.
Yeah. That's why sometimes it will take, 2, 3, 4 weeks for us to come back and say, this is what we'd like to do. We'd like to do it quicker, and again, because we're a community bank and because I think Farmers prides itself on getting back to that customer as quickly as possible, we like to be able to do things in 2 or 3 weeks because, we want them to know that we're really looking at them and we're trying to do the best we can for them.
So good. I feel like I've learned so much today about commercial lending. I feel like I could start a business now. And at the beginning of this episode, I was like, no way.
Hey, you can do it.
And this episode wasn't too bad, was it, Mike?
No.
First time on a podcast. You're all right.
I don't know. I haven't seen it yet.
Is there anything else you want to leave with our listeners, or any last piece of advice or anything that we didn't cover today about businesses?
Oh, yeah. Okay. So I've mentioned like big bank and community bank. And I've in the 41 years, I've worked at a couple of bigger banks. One was over 10 billion. And
oh, wow.
So I had to answer to a lot of people that weren't in this area. That's kind of tough because, we know Southern Illinois. We know our community, hence the word community bank. Farmer State Bank is a perfect example of a community bank because they really take the community into their thought process. And they want, not only do they want best for themselves, and they want best for the community, they want best for that customer. And I think that's really great to have a community bank and a community banker to be able to walk in and to talk and to things like that. I think as we go further in the future, AI is going to be going crazy. New technologies are going to go crazy. I think the larger banks are certainly going to encompass those a lot faster. Obviously, everybody's going to have something to do with AI and things like that. But back in 1983, when I started in banking, there was an article that I read that said in the year 2000, there was only going to be about 5 or 6 banks. They're all going to be huge banks, right? Well, that scared me to death because I didn't want to be that guy that just sat there and typed up stuff. I wanted to be a person that could walk out and talk to people and shake hands and smile and, that's the part I can do.
Yeah. That's what you got your degree for.
That's right. So I was glad to see by 2000 that didn't happen. And funny thing is, as these bigger banks that were buying up all the small community banks, there would be new community banks coming in behind them and opening up, because those people missed not having that banker that would go out and talk to them and would be there. So I know there's always going to be room for large banks. There's always going to be technology that's going to come down. So I'm hopeful for the future that there'll always be that need for the personal touch, for that personal banker, the community banker that could go out, and people always say that no one serves them better. See what I said there?
That's right. Farmers State Bank, no one serves you better. That's right.
Absolutely. So,
okay, Mike, if somebody wants to get in touch with you and just sit down and talk to you about the possibility of getting a loan, how can they reach you?
I'm at Farmers State Bank, 998-1188. Just ask for Mike. I'm the only one named Mike.
For Mike.
Just ask for Mike. Or you can ask for any of our commercial lenders. We have a great staff. And I like to feel, because I'm going on my second year at Farmers State Bank, so obviously I've been at other places, but I always feel really comfortable when I can get a new customer to walk into our bank, because they all say the same thing. Wow, this is a really cool place to bank. I really enjoy your people, and everybody talks so nice, and they're all great attitudes. So yeah, if someone wants to get a hold of me, Farmers State Bank, just ask for Mike. But any of our commercial lenders will be glad to help you anytime.
Right. Well, thank you so much for being on, Mike. And thank you so much for listening to another episode of the Isn't That Rich podcast. We will see you again next week. So, Jill, where do we go from here?
Be sure to check out our show notes for this episode, and also be sure to follow us on social media and subscribe to our newsletter. And we'll see you next week.
See you next week.